You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to another episode. I start the podcast the exact same way every single week, don't I? All right, guys, welcome back.
Yeah, and then on the off chance that I'm starting the podcast, I start it the exact same way you started.
Right, okay, yeah. But no, it'll be a good episode today. We're catching up on more earnings releases for Q1 2021.
Yeah. We're right in the thick of it at the moment.
We are right in the thick of it. We've got a lot of earnings releases, so much so that I think we'll probably take our time and focus on some of the important ones that we always follow.
Yes.
And then we might just make up the ones that we don't do today next week, I guess, because lots to talk about. We got Tesla, we got Facebook, there's Apple, there's Google. It's all the big boys coming out to play.
Yeah, the next couple of weeks is just always hectic for earnings at this time of the year. So we'll do our best to go through a few different ones, but also to provide some details on them, so we're not just kind of skimming the headlines of 10 different businesses.
Exactly. No, that's it. So I'm talking about Tesla. You might be talking about Facebook and Apple, and we'll see how we go on Google. There's another couple of stories we could get to, but do you want to jump into it?
Yeah, sure. So today's episode is sponsored by Sharesight. Sharesight is an application you can use to track the performance of your stock portfolio, and it's really good for keeping track of all of the different types of gains that you experience as an investor. So capital gains, dividends. If you have dividend reinvestment plans, then it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then the main reason why I've personally been using it for the past 4 or so years is when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to easily work out your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT. Sharesight.com/young investors. So you can use that link to sign up to a free plan and use it for as long as you want. Try it out. Try out the basic features. And you can also use that link if you want to sign up to a paid plan and get access to the premium features. And if you use that link, you get 4 months off a yearly subscription. So it's a great deal. Go check it out.
Yes, exactly. We should also say that this podcast, we might feel a little bit rushed because we are running with quite limited time today.
Yeah.
But having said that, I don't think we should try and rush anything. I think we'll just get through what we do get through, and then we'll just have to call it and come back next week.
I agree.
When you have to go. So are you going to go check out a place?
Yeah, I'm going to go look at a couple of houses today. So
nice. And you're going to buy them all.
I'm going to buy the whole neighborhood.
Indeed, there was some property investor, I think it was in Melbourne. He spent like 25 years and he bought something like 5 or 6 properties or 5 or 6 pieces of land all next to each other, so that over 25 years, he had the entire end of a street. And then I think he just knocked down all the houses and built a massive apartment complex or something. But that'll be you. That'll be you. Buy the whole neighborhood.
That's really funny. No, I'm actually just looking to just for a rental at the moment. So
are you? Okay.
Yeah, looking for a bigger space for the studio for YouTube. Okay. And I mean, we spoke about, was it last week or 2 weeks ago? I'm building my my podcast studio, Brandon, so that you have an excuse to come down regularly.
Yeah, no, that'd be so cool. You should actually do it. It's probably hard though, because you probably only want to devote one room to YouTube, podcasts, that kind of thing.
Yeah, no, so I'm pretty sure I am looking for a place that has a room where I can specifically set up something for podcasting. Yeah. So.
Okay. I like it.
So we'll see. Nothing confirmed yet. We'll it's in the works, all right?
It's all right. Well, we'll see how today goes, I guess.
Exactly.
All right, let's get stuck into it. Tesla earnings. So I thought the way I kind of like to view Tesla earnings is kind of break it down more in terms of their operations first and look at what's going on, and then after that look at the financials, because a company like Tesla, they actually don't try and run their business insanely profitable. Basically, they take all the money they make and just pump it back into improving their products and expanding their business and building new factories. That's why I like to focus so much on the operations of Tesla, just to make sure everything's on track. And there's quite a bit to talk about, even though this quarter was actually decently quiet for Tesla, believe it or not. So guess what? The Model 3 is now the best-selling premium sedan in the world.
Wow.
Full stop. And that's running off of only 2 factories too. So that is quite impressive. Very impressive. So it beats out everything. Beats out BMW 3 Series and Lexus and all the other ones.
Right. That's crazy. Is that something that's new for Tesla? Has the Model 3 done that before, or is this the first time that they've achieved that?
It was the best-selling premium sedan in the world in terms of revenue generated, so in terms of sales, like revenue, but not in terms of units, I think. So I think it's just gone units, which is pretty impressive. And this is the craziest thing, is that Elon is predicting that the Model Y is going to be the best-selling car in the world in 2022, full stop. Jeez. including trucks, including pickup trucks. And I was just remembering, I heard somewhere that Ford sells over 1 million F-150s per year, which is going, man, if they can topple that's ridiculous. I'm not sure, that might even be the most popular sold car in the world, or maybe it's not. Maybe it's like a Toyota Camry or something. I don't know. I don't quite know the stats on the world's best-selling cars, but yeah, that's pretty impressive. The Model Y could be the best-selling car in the world by 2022, so just next year. That would be insane.
That is ridiculous. Can you buy a Model Y if you're in Australia? Because I haven't seen
No, you still can't.
Right, okay.
You still can't. It's ridiculous. They've been making them for over a year now, and you still can't get one in Australia. It's just bonkers. But ours would be coming from the China Gigafactory. So I imagine as the China Gigafactory ramps up Model Y, they'll send some over here. But anyway, so as we already knew with Tesla, record vehicle production and deliveries in Q1, which is ridiculous because Q1 is typically a seasonally weak quarter in the automotive industry. So they manufactured 180,000 cars and they delivered 185,000 cars, really, if you round up a couple of hundred. And that is very interesting because, well, firstly, it's Q1 and that's seasonally weak and they've just absolutely hammered it home. But also because those numbers the manufacturing numbers do not include any Model S or Model X. So they did not manufacture any customer Model S or Model X vehicles in Q1 because they are getting ready to begin production on the new revised Model S and X, the new and improved model. So that's literally the 180,000 is just Model 3s and Model Ys. That's it.
Wow.
That's it. And S and X is usually like what? I can't even remember. 17,000 units a quarter.
Right.
So it's impressive. I mean, it's nowhere near as many, but it's impressive.
It is impressive how they've made that transition, how they started with that really premium, those two premium models, and now they're really getting into producing quite a large volume of their cheaper Model 3 and Model Y cars. But yeah, it's fascinating to see. They continue to impress me.
Yep, yeah, and it looks like this growth is not going to stop. They've got their 2 new gigafactories, the one in Berlin and the one in Texas, which are going to start production by the end of the year. Really ramping up next year, though. I don't think we should expect anything too amazing out of those gigafactories this year. In terms of their solar business, so they deployed 92 megawatts of solar, which is up 163% year over year, but up just 7% quarter over quarter. 445 megawatt hours of battery storage, which is up 71% year over year and down 72% quarter over quarter. How funny does that read?
Yeah, that's very strange.
The only reason for that is it's just a really lumpy number because it just depends on the timing of the large battery projects, because really there's not much going on, and then they'll finish a massive battery project and then it'll be like, oh my God, storage is amazing. And then it'll go back to not doing much. And then another. So it's very lumpy like that.
Yeah, and I guess you can't even really rely on the year-over-year numbers because with some businesses like Apple, for example, their sales are seasonal. So Q4 is always big. So you can kind of compare Q4 to Q4. Whereas if their sales are kind of dependent on random projects, large projects, then you can't even really look at year-over-year. It's kind of, it's always going to be lumpy. You might see a 70% up one year-over-year and then down massively year over year. So interesting.
Yeah, exactly what we're saying. Yeah, up 71% year over year, down 72% quarter over quarter. So they must have finished a massive battery project last quarter.
Yeah, interesting.
So this next section I've written a whole lot, but really it just comes down to in the US, Fremont is almost finished with the Model Y production ramp. Texas is going to be online at the end of the year. China, Model Y ramp continues. Berlin, they're building out that factory and it's going to be online by the end of the year. In terms of autopilot, quick operational update, they're rolling out beta version 9 to the early access full self-driving customers soon. They're running with a vision-only system, so they're not even going to use a radar anymore. They're kicking the radar, just going full vision. I guess it makes sense. That's how we drive. So Elon's very adamant that is the true way to get to full AI driving is just vision only. So that's pretty interesting. Last little bit, sorry, there is a lot here. Powerwall, demand for Powerwall continues to far exceed the production rate. As a result, what they're doing is they are combining their solar roof or their solar panels with Powerwall to become one product. So if you're getting solar, you're getting a Powerwall. If you're getting a Powerwall, you're getting solar. And it's a very interesting reason for that. They were finding that it was very hard to scale that solar roof because everybody's roof and, electrical systems like all different. It's like a real mishmash. So they've just decided to make this one product to make it really seamless. It says here the quote from Elon was something like, power from solar will only go directly into the Powerwall, then power from the Powerwall will only go into the house or into the grid. So it removes the need to touch the circuit breaker. That means that every house looks the same electrically rather than needing to rewire the main panel. So So there you go. But that's pretty much what's going on operationally.
Yeah.
In terms of Tesla. Any thoughts on that?
I mean, besides just being incredibly impressed again, it's one of those businesses where, for me, and obviously I've said this many times, but like I can't justify investing in it because how Tesla would need to perform is like perfect in order for them to do really well as an investment over time. But at the same time, they continue to perform near perfect or perfectly every single quarter. So I kind of just sit here on the sideline and just am wowed by them. It's just nice to see a business do so well, and they're obviously doing a great thing for the world. So
yeah, absolutely. I think not too long ago, I did a discounted cash flow, and I was trying to figure out like what would the growth rate need to be for Tesla, and I think I came out to something like they'd have to grow cash flows at something like between 50 and 60% per year for the next 10 years, for it to be like fairly valued. Or something like that. I can't remember. This is going back a couple of months, but it was something ridiculous like that. So it's like, whew. I mean, Elon Musk's the kind of guy that you don't want to bet against him, and he could pull it off. But I mean, that is a tall order.
That's the thing, right? It's probably not the most likely outcome, which is why it's not looking like an investment to me. But it is certainly possible. And every now and then, a business comes along like a Tesla or an Apple or a Walmart, and they do it. So it's not as if it's impossible. So to me, it's not an investment, but it's fascinating to watch when a business just hits the nail on the head year after year, quarter after quarter.
Yeah. Yeah, it's pretty impressive. I mean, I think Tesla's like the 4th largest company in the S&P 500 now. How insane is that?
It's ridiculous.
That's how much their market cap has gone up over the last couple of years, how much their share price has gone up.
Insane.
But yeah, we'll just have to wait and see if they can actually justify it being so expensive. But I'll go through this quite quickly. Financials. So revenue for the quarter, $10.4 billion, up 74% year over year. Of that, 2.2 billion was gross profit, so they don't get to keep much of that, do they?
No, tough business.
Yeah. And then from that, 594 million in operating income, and then that was up 110% year over year. And then of that, 438 million in net income, which is, this is kind of funny when up, I thought I'd just chuck this in for the lols, up 2,638% year over year.
Brandon, what did you say? They needed 60% growth. Well, they're growing at 2,000%. A quarter.
Exactly. But I mean, it's funny how those percentages can come out like that when you're playing at numbers so close to zero. It's like their net income could have been like negative, and then it's like $4 million, and then it's 438 million, and just it's still stepping up at about the same rate. But it's just the percentage number just looks ridiculous because it's stepped up from like something so small to now 438 million.
Oh dear, it's funny as.
Yeah. So in terms of cash flow from operating activities, 1.6 billion. Mm-hmm. However, capital expenditures was the highest it's been in a very, very long while. In fact, it might have been the highest CapEx ever in a quarter for Tesla. I'm not sure. I have to check that, but $1.3 billion. So free cash flow, they only kept 293 million.
Right.
And then in terms of just had a look at some balance sheet stats, they got $9 billion of debt, and current ratio is not looking too bad. Total current assets, 24 billion, total current liabilities of 15 billion. So they're steadying. They're not playing with fire like they were a couple of years ago.
No, they're definitely in a better financial position than 2017, 2018. So yeah, they're looking a lot better. They're producing some positive free cash flow. I don't know what their market cap is at the moment to compare that to.
Oh, something ridiculous.
What is it, like 600 billion or something ridiculous?
Yeah, I'll look it up real quick.
Let's have a look. Tesla 666.
666. Uh-oh. 666. Watch out.
It's about to crash.
Yeah, man, it's a big market cap. For what? A company that's producing, how much are they just doing free cash flow?
300 million, maybe $1 billion over the year. Maybe 2 billion. We'll get, if we're generous, 3 billion.
Yeah. It shows you that the work is still ahead of Tesla to justify that, doesn't it?
Yeah. But I mean, if they keep growing at 2,600% per quarter, then
exactly.
They'll be there in no time. Nah.
Yeah, exactly. But yeah, that's Tesla. Honestly, not a crazy quarter. And even listening to their conference call, usually it's like jam-packed full of things that are like, oh my God, that blows my mind. Not really so this quarter. Kind of just chugging along, just doing their thing.
Yeah.
And I don't know. I think really towards the end of the year, news will start to get more interesting with all these gigafactories and new products, Cybertruck and the Model S and X and blah blah blah. But for now, that is Tesla. All right.
Very good.
Should we move on?
Yeah, for sure.
What do you want to? Where do you want to start?
Yeah, where should we go? I'm going to start with Apple because I think Apple was probably the most surprising result that I saw this week. Probably the most surprising result I've seen this year.
I think Apple came out overnight, didn't it?
They did. Yes.
I haven't looked at it. I've got no idea what you're about to tell me.
Yeah,
so this will be interesting.
I mean, Apple's another one of those businesses, obviously not in high or massive growth mode like Tesla is, but it's a business that is so big. And for so many years, people have been saying they're done. Like their growth is slowing down.
Maturity.
They're a cash cow. They'll see a few percentage points of growth. They had a 9 PE in 2015, which is just ridiculous, or 2016. And yeah, this quarter is just ridiculous. It's ridiculously good. It's kind of unbelievable. So in terms of revenue, so top line, they produced for this, they report their second quarter 2021 results. Thanks, Apple. $89.6 billion, which was up 54% year over year.
Wow.
54% growth in revenue for a company producing $90 billion a quarter.
Yeah, that's insane. Oh, yeah, people say, oh, but it's year over year. I mean, that was a whole year ago, man. But it's like 54%. It's just revenue growth of 54% for a company that's one of the biggest companies in the whole world. It's got a $2 trillion market cap or something crazy like that.
Something ridiculous like that.
Oh my gosh.
Yeah. And the even more crazy thing is that it's not being driven it's not being mostly driven by services. It's actually been mostly driven by product sales. Their hardware sales have really gone parabolic. They've really accelerated. And there's a couple of reasons for that.
Insane.
But in terms of some of the specific numbers, so their products section out of their revenue produced $72.7 billion, which was up 62% year over year. So that's where most of the growth came from. iPhone sales were up 66% year over year. Computers, so Macs, iMacs, were up 70% year over year.
Wow.
iPads up 79%, almost 100% increase in iPad sales in a single year. And
holy smokes.
Yeah, before I even looked at kind of what Apple described as their reasoning for this ridiculous growth, I mean, I guess I just presumed it was, and I'm sure this plays into part of it, is maybe a lot of businesses and a lot of individuals are now going to permanently work at home. And coming out of the pandemic, a lot of businesses are saying, hey, if you want to continue to work at home, then, you know, whether the business then goes out and buys iPads or Macs for their staff and then they work from home, or whether individuals are just buying the equipment they need to work partly at home or partly at the office and partly at home.
Yeah.
That seems to be the most logical reasoning I could see for this, like, continued push in demand beyond 2020. I don't know. Do you have any thoughts around that?
Yeah, no, I think that's probably right. Like, that's been the trend over the past year or so, is more people working from home and getting their stuff set up. But I tell you what, looking at these numbers, I know that there's a global chip shortage, but I'm like, wow, maybe Apple's the reason for it. But that wouldn't be the case though, because they're making their own chips now, aren't they?
Yeah, well, I mean, and that's interesting that you mentioned that, because that's actually what Tim Cook said was the reason for such good sales. So Tim Cook actually said that computer sales specifically that were up 70% were fueled by the switch from Intel chips to Apple's M1 chips for longer battery life. But I don't know. Really, that was his answer to why sales were up 70%. Yeah. I mean, come on, like, at least acknowledge that probably most of that growth is being driven by industry or economic factors, not by the fact that you have better chips now, or that you think, you know what I mean? Like, really, 70%? So you really think that a 70% increase is mostly being driven by people who are waiting for Apple to make their own chip? No. I just don't think that's like the headline of what you should be putting in your report, if you're being honest about.
I wouldn't say it's a headline thing. However, that like the M1 chip is apparently these new like MacBooks and everything with the M1 chips in them now are apparently very, very, very good.
Right.
But yeah, no, I'm totally with you still. Like, of course, Tim Cook's going to say, Tim Apple. Of course, Tim Apple's going to say that. I mean, of course, he's going to put it down to the work that his company is doing. You know, it's nothing to do with increase, you know, people working at home or anything. No. It's what we've done here at Apple. We've made our product that much more enticing. We've made iPads 80% more enticing for people because of this M1 chip. You know, computers are 70% better, and thus we've seen a 70% rise in sales. You know, what can we say? We're so good. We're Apple. Well, you're still going to buy our products. It's so true though.
Yeah, I mean, they've just got such a good position in the market that now that they've got a really good tailwind from the pandemic.
That's true. Actually, there's definitely one of those businesses that has a tailwind from the pandemic.
Definitely.
Well, like, I always think of, you know, Zoom and Netflix and those sort of businesses, but it makes sense. Like, Apple, for sure, would definitely have a massive tailwind from the lockdown and from people working at home. And I don't know. I just don't typically think of them when I think of tailwinds from the lockdown, but it makes sense.
Yeah, I never thought of them in that way too. And I mean, as these numbers come out and as we get deeper into 2021 and maybe even next year, we may continue to see that these businesses actually see sustained increases, not just a short-term increase while people are working at home during the pandemic, but we might actually see sustained increases from people just continuing to work at home and businesses being like, hey, this isn't all that bad. I get to save on rent because I can cut down my office space to a quarter. People can come in 2 days a week, 1 day a week if they want, or not at all. And so we may continue to see businesses like Apple post crazy numbers like this.
Yeah. You know, just on a tangent, my girlfriend was at work the other day, and and the CEO's having some rant because somebody approved. There's this one that in one of the offices for the company she works at. There's now only one employee that works in the office, and so they're paying this rent for this office space. And the CEO was having a rant because someone just approved for this employee to work like all of their hours from home. So they're literally, I don't know why they're ranting. It's like, great, can't you just ditch that office space? Or maybe they need to keep it for some reason, or customer service. I don't know, but it's just hilarious.
I guess that's kind of true, because they probably need to keep the office in the event that people who are working from home now suddenly, that's just like not a situation while they're at home, so that they need a place for them to actually go. So it kind of needs to like keep that place, I guess. But yeah, it's
pretty funny.
It is a weird dynamic that
it made me laugh that the CEO's going off because this one person that's still coming into the office just got approved to work at home.
At least we've still got Ben. Ben is still working. Wait, what's that?
Wait, where's Ben?
No, he's going to 1 day a week.
Has anybody seen Rhonda? Oh dear, there's another Wolf of Wall Street reference. I chuck one in every week at this rate.
Yeah, have you got like a notepad open up with all these?
Yeah, Rhonda, has anyone seen Rhonda? Anyway, back to Apple.
Anyway, so in terms of services did continue to grow at a crazy rate. So they reached $17 billion, up 287% year over year. So smaller part of their business, but growing at a crazy rate. And within that services segment, Apple said that they now have 660 million paying subscribers for their services, up 40 million from 3 months ago, which is really crazy, right? Because Netflix, what do they have, like 200 and something million paying subscribers? Apple has 660 million.
Do they break it down into, it's like a different subscription for each service product, isn't it? It's not like you don't, or can you get like family thing where you get, or like a total access where you get access to everything? I'd have to look into that. I'm not sure.
Yeah, they just recently, and I'm not sure if you can use it yet, but they did announce it in like the last 3 or 6 months that they had like some package where you could pay a little bit less and get music, iCloud, fitness, and their TV one, their Netflix one.
Because I'd be interested to see where are most of the subscribers, like. How does iCloud compare to Apple Music? I don't know if they break that down.
That's a really good point. I would imagine that the vast majority of them are just iCloud, because iCloud's probably the one where you would get most people sucked into it for like photos and that sort of thing. Music would probably be second, I would guess. But iCloud can be, I don't know actually how much it is. I'm pretty sure it's like $1 a month if you get like the lowest one. So that's another thing to consider. That's a good point. Like they have 660 million paying subscribers, but how much are they each paying per?
Because I was going to say, isn't like the lowest iCloud subscription like $1?
Yeah.
Like $1 sure. a month or something like that?
I'm sure it is. I actually don't know, but I'm sure it's something like that.
Something like that. It's like the most basic, like you need more photos. Kind of something like that.
Yeah.
But because I would imagine that you're right. I would imagine most people would just be in some like little iCloud subscription that they've forgotten about. Then music, and then, but it's also interesting because I'm like, how many subscribers does Apple TV Plus have? Because they make their own original content, don't they? So how can we compare them to something like a Netflix or a Disney Plus or Amazon Prime Video?
They did release numbers once a while ago. I can't remember what they were.
I just have to look it up.
They were pretty impressive, I remember. But I also remember saying at the time that because whenever you buy an Apple product now, like a Mac or an iPhone, you get a year's free of Apple TV Plus. So the number is kind of warped by the fact that the vast majority of people who use it, I would imagine, are using it for free from getting free access. So I don't know how that impacts the numbers. Same thing with Amazon Prime. They have a lot of deals with manufacturers where if you buy something, you get a year free. So kind of warps those numbers relative to Netflix and Disney Plus. But it will be interesting.
And even if you just want like Amazon Prime for fast delivery, you get the TV anyway, don't you? You get everything. Okay, is that? Do we have more to talk about Apple? That is just ridiculous. That that quarter. Holy smokes.
Yeah, I mean, they've just done extremely well. They authorized another, you find this funny, $90 billion in share buybacks.
Course.
$90 billion.
Of course they did. At the market cap of 2.24 trillion. Yeah, of course they did.
So they're going to continue to return capital.
At this rate of growth, I mean, if they're going to keep growing at 70% year over year, then they may as well do all the buybacks in the world right now, right?
May as well.
Yeah, may as well. It's cheap now. If you're going to be growing 70, then 80, then 100% quarter over quarter or year over year or whatever. Then anyway, but of course they're doing a buyback. I wouldn't expect anything less.
Yeah, no, that's the true Apple way.
It is the true Apple way. Let's take this money and let's just throw it up in the air, roll around in it, throw it to investors. Do you want to improve products? No. Oh, no. Don't. No. The M1 chip was enough for us. We don't have to do anything more for another 5 years. Let's just keep rolling around in this massive pile of cash for a bit.
And then in a couple of years, we'll come out with M2.
Yeah, exactly.
And it'll be so much better.
Yeah, exactly. Yeah. And we'll come out with the AirPods Pro Plus, the iPhone 15 Plus Max Plus Pro version.
I was thinking about that the other day. So many businesses adding the plus on the end for subscription services must be like
true.
It's like the buzzword of like the last 5 years. Even Walmart has a subscription called Walmart Plus now.
Yeah.
So it's kind
like
of funny.
The OG naming convention was adding Pro to the end of a product.
Right. Yes.
Like the MacBook Pro, or the something Pro. That was the original. But yeah, you're absolutely right. Now in the service field, it seems to be the plus, something plus.
Very good.
All right, shall we move on?
Yes. Where do you want to go? Should we?
Do you want to talk? Let's talk through Facebook, and then we'll probably run out of time after Facebook. But we'll see how we go because I'm interested in Facebook. Then we'll just leave Google for next week.
Yeah. Okay. We'll go with that. Yeah. So Facebook reported, of course, this week Q1. Thank you, Facebook, for being normal. Q1 2021. And their numbers are really good. I mean, man, a lot of these tech businesses have just been posting crazy numbers. It's just, I don't know. They've kind of benefited really a lot from this pandemic, which is a really strange thing to say for something that was supposed to, it was a recession and has deeply impacted a lot of industries and individuals. But some of these businesses were just positioned in the right way. And Facebook is one of them. Their revenue came in at $25.4 billion, which was up 46% year over year.
Wow.
Big growth. It was actually their second best quarter ever. And it was only second to the previous quarter, which was Q4 2020. And Q4, so Facebook's one of those businesses that are very seasonal. So in Q4, when everyone is advertising Christmas presents and everyone is buying Christmas presents in Q4, the ad rates are through the roof and ad revenue businesses make a ton of money. So,
yes.
And they even almost beat that quarter, which is kind of crazy how big this particular quarter was, not just year over year, but just in of itself. And of course, because they're an ads business, it's the amount of revenue they generate is driven by two things. One is how many ads they serve to people, and then the price of those ads. It's kind of a two-factored calculation there. So in terms of what drove that, 12% of the increase came from the increase in number of ads served. So they served more ads to people. That either comes from more people using the platform or people staying on the platform longer and being able to see more ads, or them adding more ads into videos and that sort of thing. But the big driver of revenue was the increase in the price per ad, which went up 30% year over year.
Right. Okay.
Yeah.
I'm just trying to think, is that a 30% year over year increase? Probably.
It is. It is year over year.
I'm just thinking, because this brings us back to Q1 of 2020. No, it was really Q2 of 2020. Remember where there was actually a quarter where Google and Facebook were saying, yeah, look, advertisers have cut their advertising budget.
Yes.
So,
Yeah, that was in Q2. Q1 for
Q2.
Facebook, their revenue was still up 17% from 2019. So
okay,
this is
right.
I did check that because I was curious to see well how did they see 46% growth? Was it because last year's Q1 was so low?
It was terrible,
but
yeah.
That wasn't really the case at all.
Right.
But yeah,
so there you go.
30% increase in price paid per ad, and
so that is quite a legitimate number. That's impressive.
it is, and it is kind of crazy. And I mean, that average revenue per user is the figure that's going to drive the majority of growth for Facebook in the future. Because while, yes, they might see minor increases in the number of users that use their platforms, as we've spoken about many times, their numbers are getting to the point where there's literally not enough people with the internet to add them onto the platform.
It's slowed right down. Yeah,
exactly. So either people use the services more often, which is also not a trend in Facebook's favor. Everyone's trying to get off Facebook as much as possible, or trying to cut back at least. So what is driving growth is more advertisers bidding for ads, because the ad rates on Facebook are just so much better than television ads and other traditional methods. So that drove that increase. Expenses increased just 25%. So whenever you have expenses growing at a much smaller rate than revenue, you're going to see some big growth in profits. So net income came in at $9.5 billion, which was up almost 100% year over year. And earnings per share came in at $3.30, which again was up 93% year over year, almost 100% increase.
Blows my mind. This stuff blows my mind, like talking about Apple before and Facebook now. They're just big numbers. They're just big numbers. I mean, you rewind the clock. I remember reading stock market books and whatever, and they're like, oh, if you can see double-digit growth, then that's awesome. If you can see like over 10%. And this is like a 94% year-over-year growth. It's like, what?
It's ridiculous.
And you're right. Going back to your point, I mean, these companies are so large. They're some of the biggest companies in the world. Facebook, Apple. Apple is like probably almost the biggest company in the world. But they're not. It's their business model might be mature, but there's no maturity in their earnings. I mean, it's just crazy how. And it makes sense why people say, how can they still be classed as growth stocks? I mean, they're like the biggest companies in the world. I mean, Facebook has essentially captured everybody that they're going to possibly capture. But it's still classed as a growth stock. And I mean, these numbers show you that, that is justified,
It is. It's ridiculous because, as you said, they're such a big business, but they're also pulling revenue away from like so many other businesses. So like they're pulling so much revenue away from traditional network television shows or television networks that were advertising. And all of that revenue is getting kind of from all of these different networks around the world is getting funneled into Google and Facebook. And as a result, it creates these two behemoth businesses that can continue to grow at a crazy rate.
Yeah.
It's
it's so true.
It's like they've got like a big vacuum cleaner just they're just like sucking it all up.
Yeah, no, that's hilarious. It's so true though. It's so true. And that's why we get, crap like the news media bargaining code. It's just like news companies just having a cry because they lost.
Yeah, pretty much.
Yeah. It's just insane. It is just insane. It really is.
All right, we better talk about some of their user numbers because it's obviously super important for Facebook. Daily active users came in at 1.88 billion, which was up 8% year over year, so still growing. Monthly active users, $2.85 billion, up 10% year over year. Again, still going quite well. In terms of their family of apps, so not just looking at Facebook, now looking at everything, their daily users came in at 2.72 billion, which is up 15% year over year. So even though Facebook's growth specifically has kind of slowed to single digits in terms of users, as a group, including Instagram, WhatsApp, and that sort of thing, still growing at a crazy rate. And the number of people who use any of those apps at least once per month came in at 3.45 billion, which again up 15% year over year. Crazy numbers.
Yeah, crazy numbers. Crazy. I mean, that's almost what monthly users on the family of apps, 3.45 billion. That's almost half of the world.
Yeah, and we spoke about this last week. I think we did a Google search for how many people have access to the internet, and it was 3/4 of the world of people who have access to the internet use one of Facebook's apps, which is just is ridiculous. 3 out of 4 people who have access to the internet using one of those apps is doesn't even make any sense. That's just insane.
So 3.45 divided by, where's the Earth's population? 7.6. No, 7.7. 7.7. Oh, 45%.
Yeah.
45% of the world's population are using one of Facebook's apps at least monthly.
Yeah. And even to make that number even like to make it just fair at all, you would want to remove maybe people who don't have access to the internet, but maybe you want to include them, but you definitely want to exclude people who are like under the age of 10, which would be a big chunk of the population. And true. And then you wouldn't include them in a number like that. So
true, actually. When do people get Facebook accounts?
It's 13, I think, is the age of it.
So yeah, you eliminate the Earth's population of people that are under the age of 13 to get a truer sense. And that's bonkers.
Yeah.
I wonder how many people. I have to look that up later, but maybe I'll try and get that done next week. We'll come back and figure it out. But yeah, wowee. Actually, there's one thing I wanted to bring up that you might know something about. During the week, I was talking to Jason. He was saying that the iOS. You remember how the Apple were getting cranky, and they wanted to help their customers better protect their ID and have less data harvesting. Do you know what happened with that?
Yeah,
Facebook was going to be heavily impacted from this iOS update, wasn't it?
Yes. So in this update, one of the main changes that Facebook was quite worried about was that now that this update is out, I think it came into effect this week, users are now required to actually opt in to tracking with apps. So basically when you open Facebook, a little pop-up will come up. When nowadays, when you go into an app that requires your location, you get a pop-up that says, do you allow it while I'm using the app or all the time or never or something like that? Now you're going to get a pop-up in regards to Facebook tracking, any app tracking, but Facebook is probably the one we're talking about right now. And yeah, I guess if a lot of people opt out of that, it's just going to make targeted advertising a lot less effective. So what Facebook does is for part of their ads is called network audience advertising or something like that. And that basically allows them to advertise or allows businesses to advertise through Facebook, but to advertise to iPhone users while they're using other apps. So if you're playing a game and an app comes up during that game, Facebook can targeted advertise to you.
Yeah.
And ads like that will not be able to be served if that's the case. And there will just be less tracking from Facebook in terms of tracking what apps you're using and other things when you use your phone. And Apple is positioning themselves as saying, hey, this is just us protecting our users. Facebook thinks it's targeted at Facebook as a bit of a dig. Facebook being quite upset that Apple continues to take 30% of their marketplace sales that are done through the app, even though Facebook takes 0% from those sales.
Wow. Okay.
And so it is. Yeah, I mean, what the true intention is, I like that people have more choice with whether they want to be tracked or not. But I mean, yeah, ultimately, I think it will hurt a lot of businesses because someone made a good point to me the other day, which was that Facebook, you're still going to get served ads. The ads are not going to go away, right? It's just that you will get different types of ads. It's just whether you will get ads that are targeted to your interests and they're less intrusive, or whether you'll just get broad ads that don't require targeting, like political ads. That's pretty much. You'll get served political ads if you turn this off.
Look, yeah, and to be perfectly honest, there's a case to be made there where I'd probably prefer to see ads about video games or about Tesla accessories as opposed to something like some random political ad that I would never vote for that person in a million years kind of thing. I mean, that's another argument is that, yes, I totally understand that people don't want their data to be, sucked up and used I don't know, used to target them with ads. But at the same time, it's really used to make those ads relevant to you. So it's like things that you might be interested in. So there is like an element of, okay, that's actually probably better than just getting served crap that I just don't want to hear about, you know?
Yeah, I completely agree. I think people don't realize how less intrusive it is to see ads that a lot of the time that are related to what interests you have. It's actually, you actually notice far more. You notice the ads far more if they're things that are just not, if they're not interesting to you. They kind of shock you. They're like, oh, why is this an ad? Why am I getting this ad? Kind of thing. So I don't know.
There are some ads that I get on Twitter when I'm scrolling. And sometimes Instagram, where they're almost just like memes and they make me laugh. It's like I don't click on them, but it would be like some meme. And I'm like, that's funny. And I'll just keep scrolling. I mean, in that instance, then I scroll past them like, hang on, that was actually just like a positive ad experience. What the heck? Like that's just stupid.
Yeah.
But I mean, I would much rather scroll past an ad, have a laugh at a meme and then keep scrolling than see, oh, vote for Clive Palmer and blah, blah, blah. We're going to mine the planet and you're going to love it, you know?
Yeah. I mean, I certainly think it's good that people have the choice to opt in or out. But having this pop up may do some damage to Facebook's business. So apparently we're not going to see the impacts of that until Q3, Q4. So we will just have to wait and see for that one.
Is that all we got to talk about for Facebook there?
That's pretty much it. Yeah.
That's pretty much it. And we are pretty much out of time. Said 20 past, you need to run?
Yep. Got to run.
Yep. All right. Cool. Apologies for the podcast being a little bit shorter today, but at least we still got 45 minutes in. I mean, that's pretty good. That's roughly what we normally do. So so they are three. That's Facebook and Apple and Tesla. Thanks very much for tuning in as always. And we'll be back. We'll talk about Google next week and a whole host of other companies, I am sure, plus some other stock market news. But we got to run. So thank you guys very much for listening in. We hope you enjoyed the episode, albeit it's a little bit short, a little bit focused on just earnings. But thanks very much for tuning in. Thanks, Hamish, as always, for joining me. Thanks to Sharesight for sponsoring, and we'll see you guys next week.
See you guys.